Good evening and welcome to my S&P 500 end of the week recap and plan ahead for next week. Thursday, I was able to take one trade, hold it overnight, and close the rest out on Friday morning here on the gap down, a little bit of a reclaim, and made some pretty good profits on there. First of all, my plan was to look for an entry around this 21 EMA. Didn't quite come all the way down there. Normally don't like to trade in between the two moving averages, but you can see this huge green, pretty much an engulfing candle. I call it a pipe bottom type of candle. It's just a bottoming formation. I went ahead and chased in some 8 June 272 calls here at 207. Came up, tested the previous highs of Wednesday, and got out half of that position at 274. Towards the end of the day, price action started to roll over. It looked like it hit some resistance. It was going to break down lower. Got out another quarter of that total position here at 257. Gap down Friday, immediately canceled my stop and waited to see what price action was going to do. Didn't quite get back up to where I wanted it to. Saw some resistance at the gap right here, pretty much off of this opening 15-minute candle. Definitely going to see some resistance at a candle like that at the upper wick. So went ahead, closed out at 231. Left some on the table there today, but price action being inside of the previous day here on Thursday, there was no momentum, no trend to be traded. So market makers were going to do their thing and just kill premiums in all options. So got out of those, made my profit. I'm still holding these 18 August 295 calls and the June 2019 325 calls for a bigger move up. Over here to the daily time frame, I'm going to go ahead and pull everything off the chart here. Price action is just chopping around. I mean, it's fairly obvious. It's made a nice move up. It's consolidating, digesting that move, and now we have formed just a channel. I know there's a lot of lines on here. This white line is the trend that's broken. It's now consolidating above that trend. As long as we stay above, I would say 270-ish, still good to go. Ideal level to hold above, excuse me, is this 271.30. This is the previous week's high, and as long as we stay above there, should be okay. Or excuse me, previous peak on the weekly time frame. I go right here. I can show you what I'm talking about here. See this previous peak back here in April is 271.30. As long as we're above there, at least implies that level is going to now be support. Need to see a move above these 2 weeks to confirm that as support, and if there is still bullishness in the S&P 500. So now going to the daily time frame again. Still looking for this overall measured move of this flag, which I have adjusted slightly based on the candle from Thursday. I was very convinced that the flag break of these two wicks right here on Wednesday was actually going to create that measured move, but there was absolutely zero follow through. So I've now flattened out this channel. It's now going straight across, consolidating, and a measured move from about this low up to about 286, which takes it in line with the previous all-time high. In order to shoot for that, I'm actually going to have to wait for price action to break above this 274 level on some significant volume. Now on the daily time frame, if you've watched any of my videos, you've heard me talk about an inside candle before, which just means today's price action was all completely contained within Thursday's price action of the previous day. All that tells me is that there is compressed price action. There's no real direction. There was a battle today. Volume does at least moderately confirm there's participation in that trade. So it was a battleground. Whichever way it breaks, there's going to be stops that are triggered. Maybe some momentum players looking for a move higher. Some top callers trying to push this down lower to trigger a move down here to at least the 50 SMA. Either way is fine with me. Of course, ideally, I want to see it break higher. Now to my plan for Monday. What I'm looking for here is a break of this little intermediate trend line here that is in the middle of this channel. A break above there will at least start the move up to 274. So if that breaks, I will look at 273 calls about 3 weeks out in the future. Stop loss will be just below this latest consolidation area towards the end of the day here on Friday. If that does not materialize as a potential play, I will look for 270 calls here about 2 weeks out with a stop loss just below. If price action for some reason gets a little squirrely, breaks down, starts to chop around and breaks this 270 level, that is also below that weekly peak area that I was discussing, and I will take some 270 puts with a target down here at the 50 SMA. about a $3 to $4 move down, depending on how the 50 SMA moves. It's still curling down a little bit, so price action may pull down to it. We'll see. If that does occur, I will take profit here and immediately look for 268 calls about 2 weeks out. For now, that's my trade plan for the S&P 500, maintaining positions in those 325 calls and 295 calls. If you have any questions, comments, please feel free to leave them down below. And also come join us at the Trade Crew chat room. It is free. Have a good weekend. Enjoy some family time. Good luck.